Hello, my name is Steve Bigelow with the Candlestick Forum. The big question for the last 3 months is there going to be a recession? And if you're a candlestick analyst, you don't really care. This is what you want to analyze is what is the market telling you? Which way are things going? So the benefit of using candlestick patterns is if you're in a downtrend and they're trading positive, this kicker signal to the downside didn't tell you that there was going to be a knee-jerk reaction down and probably heading higher. The strength of that bearish kicker signal revealed there was probably a lot more downside completing this bearish J-hook, wave 1, wave 2, wave 3. So whether there's a recession or not, it doesn't really matter. All we're analyzing is what is the market telling us. And right now the market is telling us they're in a downtrend for two reasons. We can identify the pattern, and we know that last strong kicker signal after the CPI report told you exactly what the investor sentiment was telling you, that they were creating another pattern with a strong force to the downside. So with that in mind, the candlestick analysis allows you to find the bearish moves that have the strongest potential profits. So as we can see in Fizz, the dumpling top, the bearish left-right combo, the close below the T-line, just a very strong move to the downside. Now start watching for profit taking, which would also coincide with the T-line coming down and being breached to the upside. But the big factor that you gain with the visuals of candlesticks is if you can see patterns developing, then you know what your high probability trade setups are. If you didn't go short an Apple over the last couple of days, if it opens lower on Monday, now you got a bearish doji sandwich, and we know the results of a bearish doji sandwich is more downside. So if we know that there's a lower open and a bearish doji sandwich, we know the result of a bearish doji sandwich is more downside, which coincides with what this bearish J-hook pattern was revealing. Our recommendation to go short on light was also based on a bearish J-hook, starting with your bearish best friend, your doji gap down, and the fact that they didn't hold this level right here told us there was still wave 3 to the downside. So this is nothing more than identifying that a lot of stocks are going down. What we want to find are the stocks that have the strongest potential downside. So our recommendation to go short on ARI is based on, look where your doji is occurring, right here on the 50. We already have a slow curve to the downside. If this opens lower, what's it telling us? Again, a bearish doji sandwich implying more downside. To us, that's bearish, but it's going to be enhanced by the fact that everybody that's watching the 50-day moving average is going to be bailing out because it's trading below the 50, giving that much more emphasis to the downside trend, still making this level a target, which is exactly where your gap is. So anytime we can see a pattern set up, in this case bearish, and then notice what happened in Carvana on Friday. They gapped it down and traded it lower, giving you a bearish trend kicker signal. And what's the implication of a bearish trend kicker signal? A lot more downside. So another one that can be shorted based upon the weakness in any trading, which will be evident that if we wake up tomorrow morning and the pre-market futures are showing the Dow's going to open up down 120 points, that's more conviction that the bears are in control. We're still in this downtrend. So whether you think there's a recession coming or not doesn't mean a hill of beans. What is everybody doing as far as their investment decisions, as far as the markets in general? So all this identification of candlestick signals and patterns is very easily recognized visually. And this is what kind of overrides any fundamental analysis, or at least enhances fundamental analysis, that if you think things should be bought right now because of their fundamentals, but you can identify that the markets are not cooperating, you definitely do not want to be buying anything in this market. So join us for a 2-week free trial. Again, this is where you can use the chat rooms, where you're seeing what some of our experienced traders are revealing or identifying as good trades, and why they're good trades, whether bullish or bearish. Then this coming weekend, we're going to go through the ultimate candlestick training program on Saturday, a full day training where you put everything in alignment, analyzing what the overall market trend is doing, and then finding the strongest signals and patterns that coincide with that trend. Then using confirming indicators that enhance your probabilities. And then you get rid of your mental deficiencies, I guess is the right word, by knowing what your high probability entry strategies are, where to set your stop losses, where to take profits. All these indicators, or all these facets, tell you that this is where you should be buying or selling based upon probabilities, and then making decisions that completely take your emotions out of your trading. That'll be it. We'll see you in the chat rooms.